Snipers, you have to see what's happening in the cryptocurrency market today as Bitcoin is taking the path of least resistance, moving sideways to a little bit higher inside of the symmetrical triangle. You can see since we broke down back inside of this triangle, if we go into the 4-hour time frame, we are starting to elongate inside of this triangle, and that's exactly the scenario I've been talking about as the scenario that would lead us towards following the path of least resistance when there's low volume, which is always going to be sideways to a little bit higher. And that's the reason we've yet to form any more lower lows. All we've seen so far with Bitcoin so far is we've formed higher lows, and that's a very positive thing to assume a potential reversal back to the upside and for us to start seeing a break of 38,000 again at some point or another. Understand it is the weekend right now. This is the most manipulated in the cryptocurrency markets due to CME futures being closed. And so at this point, because there's low volume into the weekend, and of course we're heading into Sunday tomorrow, and at this point, I don't believe Bitcoin will yet to see the break of 35,000 just yet. I think that we're going to come into next week with an open mind, and I think the Bitcoin price right now is in an accumulation phase. Whether that accumulation phase is a good area for a potential long, that is yet to be determined. But we all know that if we do break 35,000, we are going to potentially see downside towards 24,000 US dollars. But below that would be very unlikely, at least in the medium term. And so at this point, when we look at the risk to reward, where we're at right now for Bitcoin, to me, it's an accumulation zone. And so regardless of if we break up or break down, if we look at the risk to reward on a more macro position, we look here all the way down to the $24,000 level is about the 33% risk. But when we look at upside potential, if Bitcoin were to see continuation to the upside and that $30,000 level does end up being the bottom, then we have 70% potential upside just to get to where Bitcoin was at a couple months ago. And that doesn't assume further highs if Bitcoin does end up breaking new all-time highs, and that would be beyond 100% profit for a 30% downside risk. In my opinion, you wouldn't want to just enter a full position in this zone just in case we do see further lows for some odd reason. If something happens in the traditional markets, which we'll look at in just a second, there could be a potential we see wicks to some lower price levels. If this $35,000 level breaks, it's still the extremely key level for us right now, especially now that there's so much confluence with this market structure, which is one of the most important aspects of technical analysis. So we'll look more into the micro time frames since we are approaching the apex, but we'll also cover what's happening to altcoins. We'll look at Ethereum, of course, as well. On the daily chart, you can see we're staying around this very, very key support level. That's a positive thing. So far, we do have this bearish tail on the daily candle. We do want to address that, put it on the table, but the Ethereum to Bitcoin chart is starting to break these candle highs, showing strength to potentially head towards the 86,000 Satoshi area. This is going to be a huge puzzle piece for other altcoins because when we look at others' dominance, we're also seeing strength to the upside. We look at the moving averages. We're coming up, trying to get back above the 50-day moving average. The fact that we're above the 100 period, we didn't break the 100 period, is very positive in a medium to long-term basis for others' dominance, which is what's going to determine the strength of altcoins. Bitcoin dominance still trending down as we've expected. And then, of course, we'll look into gold and traditional markets, but it is the weekend, so they are closed. And then we'll take a look at the total cryptocurrency market cap chart because we still have this weekly candle here that's holding on to this 20-week moving average. But once again, for the second week, we do have a potential bearish tail forming. Does that assume we're going to see another push to the downside? There's a potential. Do I expect us to see a monstrous fall like we saw earlier in this month? Probably not. I think that there could be a potential that we see lower levels. We've already cleared all of the longs down at these levels, so it wouldn't be an issue for the institutions, the whales, whatever you want to call them, to bring price down here. The longs have already been cleared from this wick when we got down to 30,000 for Bitcoin. And so we have a lot to look at today. You guys are watching the Sniper channel. I'm here in Bitcoin Miami. I'm getting no sleep, just going on yachts, going to meetups, going to the conference. and doing what you do at conferences here with a lot of my friends. And I'd love to see some of you guys at the conference today. I'll be heading over there here real soon. And my name is Naeem Al-Abaidi. You guys are watching the Snipers channel. Remember to smash the like button for the YouTube algorithm. We'll quickly just kind of graze through this more micro time frame for Bitcoin today. I'm not expecting some crazy price action this weekend just because there's so much importance at the levels that we're at right now. And when we look at the Bitcoin distribution model, this is more on-chain analysis, which I'm not going to go into the charts, but I will talk about it. 10.5% of the supply for Bitcoin came above the $40,000 level. And so what that means is this is going to be a very big resistance level regardless of what happens to Bitcoin. So if we see a break of 38,000, we start to head up. There's a lot of distribution and volume in this area. And so 10.5% of the supply being above 40,000 is going to act as a lot of downside pressure for Bitcoin. We're really going to want to see some institutional type of buy volume. We're seeing more retail buy volume right now at these lower levels. We're not seeing as much whales come into the market. We're not seeing as much directional leveraged positions, which assumes that traders are waiting to put a confident position in on what direction Bitcoin is going in because they probably were spooked out from this over 50% drop that we saw. I mean, that's very rational and acceptable for a margin trader. And so when we're seeing low volume, when we're seeing very low futures volume, and we know there's a lot of downside pressure above us here at that $40,000 level, that is a concern. But realize this, we have to address the downside scenario because at some point or another, it could be an Elon Musk tweet, it could be something that comes up, right? There's always something. And I'm not here to say that those are always the reasons we see price fluctuations in markets. The market will always assign a reason to why something happens. But as we looked at 2 days ago, we saw this bearish sign here. We knew this was going to drop. And then when Elon Musk tweeted, it did drop. Everybody blamed it on Elon Musk. I didn't blame it on Elon Musk. I looked at the technicals. And so the fundamentals are important. However, the technicals are just as important. The psychology is even more important. And so that's why we're talking about on-chain metrics right now. And so I know this is a little bit of a different type of video, but I wanted to ensure to get you guys some of the information that my analysts and I have been looking at. And looking at distribution models are very, very good. And realize this, that if 30,000 breaks, there's a lot of buy orders here at this $33,000 level where we formed this higher low. And so we know there's a lot of pressure here as well to the upside. And so we're in a very interesting area for Bitcoin where we have all of this upside pressure here that comes up from 20,000. There's a lot of distribution as well here around the $20,000 to $23,000 level. But there's also a lot of new buys and orders down below the $33,000 level. So there is a lot of pressure here. There's also a lot of pressure coming from this side. And so when you have this type of pressure and you start consolidating inside of these ranges, typically we're going to wait to see what institutions decide to do. And in my opinion, as an umpire, I'm going to just look at traditional markets really quick. They are closed, but let's look at what institutions have recently done when we look at traditional markets. And first we'll start with the DXY. We know this has the biggest effect on markets. So notice here with the DXY, we're still seeing weakness. We're coming back here towards this weekly open, and we initially saw this push to the upside, but then we got the unemployment numbers and we came right back down, erasing all of this upside. If we get back below this previous weekly open, that's going to be the preferred scenario into next week. That's what I'm going to be watching here as futures markets open on Sunday. But more importantly, we realize that gold is starting to see some strength. And this is a lot of times where we see institutions hedge their bets, especially with Bitcoin not being as adopted within institutional, capital. A lot of institutions will still come to gold if they want to hedge against traditional assets. And so we can assume that right now, institutions are trying to hedge away from traditional markets because gold is doing well as a commodity. And we look at the DXY, there is weakness. And so that could bring fear amongst the institutions that holding the US dollar probably isn't the best idea right now. And so that's a positive for the Bitcoin environment when we think like an institution. You know, if you guys have been tuned into the Snipers channel for some time, you know, I always say, think like an institution. And so the fact that we're seeing hedging in other assets like commodities, that's a positive thing. And I'm going to be really honest here. This S&P 500, after we saw unemployment numbers come out on Friday, closed very bullish, as if it wants to continue to see new all-time highs. We're way above this 50-day moving average. We were able to hold the 50-day. We never came down to the 100-day. That's a positive sign. And so we're seeing light volume. The path of least resistance is always sideways to a little bit higher. And a lot of that has to do with inflation. Of course, inflation is something you can't stop. It happens every second. And so that affects the price of assets. And that's why the path of least resistance is always sideways to a little bit higher. So that's a very positive thing. I think one important thing we want to watch is the gold to Bitcoin chart forming this potential cup and handle. The Bloomberg analysts are saying Bitcoin is not a digital version of gold anymore. It's an NFT. After the energy concerns that Elon Musk brought up, now they're changing the storyline. So let's monitor this gold to Bitcoin chart. We're heading towards the 2017 top here. It'd be very interesting to see Bitcoin get back to the levels against gold from 2017, because that would erase a lot of the gold thesis, because that means that we didn't really see a distribution that is, you know, showing more interest in Bitcoin than gold if the ratio gets back to where it was in 2017 and continues beyond that. And so if we want to assume the storyline of Bitcoin being digital gold, then we want to see Bitcoin continuing to gain dominance against gold. That's my opinion on this chart. And so it's going to be an interesting chart to watch unfold into the week. And with that being said, I hope you guys enjoyed this analysis. If I had the Principles by Ray Dalio book, I'd give it away to one of you. But I appreciate each and every one of you snipers tuned into our channel. I'll be changing the weekly open here as we head into a new week. But very interesting stuff happening for Bitcoin. As an umpire, I don't think we're going to be seeing much price action this week. I don't think the $35,000 level is going to break, but it is the key level that we're going to be monitoring. And with that being said, I do want to conclude with one last quick review for Bitcoin right now. We're back inside of the symmetrical triangle. What that means is there's a very big area here of accumulation that is going on, primarily amongst retail investors if you look at on-chain metrics. But the institutions have yet to come in. There's a lot of downside pressure. There's a lot of upside pressure. What that means is if 35,000 breaks decisively with 1 hour and 4 hour candles, that, in my opinion, is a confirmation. We'll see the move to the downside. For the upside, if we start to move up beyond 38,000, which is the key level once again, that's going to be the early confirmations of a push to 41.90.50. We know 40,000. There's a lot of orders here as well. The same way the volume will work if we get pushed to the downside, it will also work to the upside, because when investors have confirmation of a move and a directional intention with an asset, they will start putting in marginal positions, bet on the direction they believe the asset is going, and we start to see volume come in. And so the confirmation will also bring volume if we come to the upside. Is it likely based on the market environment outside of Bitcoin right now? In my opinion, we have the perfect scenario outside of Bitcoin in the cryptocurrency market right now to see further upside, and for this $30,000 wick to potentially be the worst of what we've seen. Now, if we break 35,000, the worst case scenario, once again, I don't think will be as bad as you may think. I don't think this will happen. I don't think this $20,000 level will ever get back into the equation, because in past cycles, when Bitcoin has broken an all-time high, we've never come down to retest the previous all-time high. And with that being said, I appreciate each and every one of you snipers. I'm going to pick a winner for a giveaway, and I'm going to wrap up this video. Let's go ahead and see. Garrett, you've been a very long time viewer of our channel. He says, I hear it all too often how you can't predict this stuff when news or somebody like Musk tweets. Those people don't understand how to read a chart in markets like you do. Keep killing it, brother. Thank you, Garrett. I know you've already won Principles by Ray Dalio. I'll send you another book, Mastering Bitcoin, or another one of my favorites. Just send me a message on Instagram, brother. Thank you for being a longtime supporter of the Snipers channel. I really appreciate that. That means the world to me. You can't buy loyalty and integrity. You can't create loyalty and integrity. You can only find it in people. And so character is a very rare thing, right? And with that, thank you all for tuning in. I'm excited to see what happens here in this accumulation area. And until next time, I'm going to head to the Bitcoin conference, and I'll see some of you there. Snipers.